any with a lot of the information that we talk about in this class. But my name is Danielle Damianov. I am a mortgage loan officer with Nexa, real estate broker associate with EXP, CEO of Done by One, which is a CRM for real estate mortgage sales professionals. The website is donebyone.ai. So if you are looking for a real estate CRM or a mortgage CRM, this is the CRM for you. So, who is Danielle Damianov? And you might be wondering, like, why is a loan officer talking to us about real estate and how to get listings sold? I got into the real estate and mortgage business back in 2001. I have literally worn probably every hat from loan processor, loan officer. I owned a real estate and mortgage company from 2005 until 2008. When the market crashed, I ended up closing both companies and going full time into real estate. I moved markets. So I was in Southwest Florida. I moved to Miami. I am what you would call, or I was what you would call an expired listing specialist. That's how I got all my deals, or the majority of my deals. So I was very heavily into prospecting, into Mike Ferry. I coached with Mike Ferry for over 10 years in one-on-one coaching. So a lot of what I talk to you today what I talk to you about today is going to come from my Mike Ferry coaching, the coaching that I did with the Mike Ferry organization, as well as things that I've learned along the way. I wrote an article for Forbes. I've been in Top Agent Magazine, South Florida Agent Magazine, and these two books, Real Estate Secrets Unlocked and Short Sale Secrets Unlocked, are both sold on Amazon. So that is a little bit about me, but we are going to hop right into it. And let's talk about how to get your listing sold, especially in today's market. Okay. So I want to talk about the current market, right? What we're seeing. And if you guys have any questions, please put it in the chat. I will be answering them. I might just not get to it right away, but please put your questions in the chat. There's going to be two parts to this webinar. Okay. The first part is we're going to talk about how to get your listing sold. The second part is loan programs. So I am going to show you guys loan programs that a lot of other agents don't know about that is going to give you an edge as an agent so that you can work better with your sellers as well as your buyers, and you'll know all about how they work, right? So in today's market, we're really seeing, number one, increase in inventory, right? We're seeing higher interest rates. Obviously, interest rates have been high for a long time. They are definitely getting better, but they're still not great, right? There's still affordability issues. We're seeing people want to move, but they don't want to lose that low interest rate, right? They're like, well, I'm paying 3.5%. I don't want to go to a 6.5% interest rate. I might as well just stay here. We are seeing a lot of increased short sales and REOs, and I think we're going to continue to see that. First of all, in Florida, especially, we've had a lot of issues where like the flood maps changed, right? So people that were not in flood zones before are now in flood zones. Our flood insurance is extremely high. So we are seeing a lot of people that are just not able to afford these homes, not to mention maxed out credit card debt, right? We're also seeing prices go down in expired listings. I was talking to a friend the other day. I did their loan 3 years ago, actually. And they purchased at 279. And if they were to list their property right now, they would be listing it at 199. So anybody that bought during those COVID years where like it was a buying frenzy and it was like, the appreciation was crazy, those people, if they want to sell, they're most likely not going to be getting the price that they purchased that house for. So we're seeing a lot of that in the market, and then we're also seeing a lot of price decreases and a lot of expired listings. So if you are in the market and you are an expired listing specialist, now is your time to make a lot of money, right? So let's look at this is Southwest Florida in the past 7 days. I pulled this yesterday. but we can see that there was 1,714 new listings that came on the market and only 564 sold, right? Back during the COVID, our solds were up a lot higher than the new listings coming on the market. So that is telling us, obviously, we are in a buyer's market, okay? Look at the price decrease. We're seeing over 2,000 in the last 7 days, people lowering their price. We're seeing listings getting extended. We do see 981 pending, so that is good, but we're also a very seasonal market in this area. So that, has something to do with it. And then we have 177 listings that have expired off the market and 250 terminated just in the last 7 days. So if you are trying to figure out where to get your next deals, I do have an expired listing class. It's 177 expired listings. Those are people that have already raised their hand saying, I'm looking to get my home sold. It did not sell this time, and they are going to need a strong agent to get their home on the market and get it sold for them. So something to kind of think about if you're trying to figure out where you can get more business from, okay? So I want you to ask yourself, what is your listing strategy, right? You do not want to be that PPP agent, which is put it on the MLS, put a sign in the yard, and pray that it sells. That is not going to be you, right? You want to make sure that you have a solid listing strategy when you're working with sellers. And I can tell you that when I first got started in real estate and I first got started in expired listings, or FSBOs or whatever, right? I was very hesitant to set those appointments because I didn't have a solid listing presentation. I had to recreate my presentation every single time. So if you're thinking about what to work on in, let's say, Q1 or Q2 of this year, it could be your listing presentation. And so you want to make sure that you're getting a solid listing presentation down with your pre-list process, your process at the house, and then your strategy once you do get the home on the market and get it sold. We're not going to talk about that now, but I want you to know that it's extremely important that you work on that. And once you have that down, right, then you are going to want to take every single listing out there because you have a proven strategy to get your listing sold. So something to think about. Getting your listing sold is going to start before you even list the property, okay? You need to have a strategy and communicate with the sellers before you even list the property to make sure that everybody is on the same page. Not only do you want to set yourself up for success, because the last thing that you want to do is spend all of this money, on marketing, on staging, on photography. Most of the time the sellers will pay for the staging, but if they don't have the money, well then it needs to be staged. That might be falling on you, right? So you want to make sure that you're going to get this property sold because as a listing agent, it does cost you money to sell the home. And if you don't sell the home, well, then all of that money just went to waste. So you want to make sure that you're setting yourself up for success at the listing appointment, and communication is key. So when I was working a lot with expired listings, I can tell you that the number one, whenever I asked an expired listing what their reason was that their home didn't sell or what they did not like about their last agent, almost always they said that the last agent did not communicate with me. So you need to make sure that you have a system that is communicating systematically with your clients, okay? So communication is key. So ask yourself, what is your pre-listing routine? What is your pre-listing presentation routine? What are you doing before you even get to the house? And I can tell you what my pre-listing routine is, and everybody else that's probably in the Mike Ferry organization. But the very first thing that you need to be doing is pre-qualifying your sellers. And this is one of the handouts I will be sending to you guys in an email afterwards because I was not able to upload it. but I will give you the pre-qualification script, okay? So you want to make sure that before you go to the house, you're asking those tough questions, especially in this market. You need to find out, is this a have to move? Is this a want to move? Is this just, I'm putting it out on the market and let's see if I can get my price? Because this is not the market to do that, right? So you really, really, really need to get to their motivation. And that is by asking a lot of tough questions. Well, what happens if this home doesn't sell? What is your plan B? I know a lot of times we don't want to ask a question like that, but that is going to pull the motivation out of them. Because I can tell you, one of the biggest things with listing property, one of the biggest objections that you will have is price. Okay. Sellers want this and the market is here, right? Sellers want the high price, but the market is not there. I was talking to an agent this morning and her seller wants like 1.6 when it's really only worth 1.2. So those are the questions that you need to figure out to ask the motivation, because if they want 1.6, let's just say, and they don't have to sell their home, well, then it, in my personal opinion, would be a waste of time and a waste of money, and also a false promise to let somebody know that you're going to list the property for 1.6. And there's this old saying that if you generate, you don't have to tolerate. So a lot of times when we want a listing, we're going to do whatever the seller wants us to do, but that's not the way, right? That's not what you're going to do, because you're going to be a strong listing agent. So you need to really pre-qualify your sellers and ask all of the tough questions before you go to the property. The next thing you need to do is you need to send over a pre-listing package before you meet with them. And that pre-listing package is going to include your marketing plan. It's going to include the contract so that they have time to read it. And it's going to include your price. Because the last thing you want to do is get to the home with your presentation. You never sent it to them before. So you get to the home with their presentation, and then what do they say? They say that they want to think it over, right? Because they didn't have a chance to think it over prior to you coming, or they didn't have a chance to review your package prior to you coming. So you want to make sure you're either emailing or dropping off a pre-listing package for them to review. What I used to do is, because my listing package was pretty big, so I had the little sticky tabs and I would tab the pages that I wanted them to see or to read. One of the most important pages that I had in my pre-listing package was the FAQs, or the frequently asked questions, because I didn't want to get to the house and have all of these objections. So on my frequently asked questions page, I had the most common objections and the answers. I only want to give you a 90-day listing. Question. My answer, no, and this is why, right? I don't want to list for less than 6%. And I know commission is a touchy subject here, right? But this would be my commission, answer. I'm thinking about listing it with a family member or a friend. My answer why that's not a good idea. So I had all of my frequently asked questions in my package so that they already saw the objection that they might be giving me, as well as that objection handler on a piece of paper. So a lot of times when I got to the listing, that listing package, that listing contract was already signed, right? And you're sending your comps and you're sending what price you think it's going to sell at, because they need to think this over and review it before you meet with them. You don't want to get to the home and then have them say, now I want to think it over, right? Especially if you want to do a lot of listings. Now, if you're looking to only do 10 listings a year, okay, it's a different story. Maybe you should still do it this way because this is the most efficient way, but it might change a little bit. If you're wanting to do it, do a lot of listings in a year, then you have to be strategic, okay? The third thing that you're going to do is you're going to call to confirm the appointment, and then you want to pull out any objections right now that they currently have, but you're not going to answer those objections. So what you want to ask them is, I just wanted to confirm the appointment for this Thursday at 2 p.m. Is that still a good time for you? Okay, excellent. And I also wanted to see if you had a chance to review the pre-listing package. Do you have any questions for me before I come over Thursday at 2? Oh, well, we were thinking about, we really wanted to do a 4% commission or whatever. Okay. You're not going to answer that question on the phone. What you're going to say, anything that they say is, I completely understand that commission is important to you and it's important, and it's important to you as well as the net that you're going to receive at closing. So that will be one of the very first things that we'll talk about when I meet you Thursday at 2. Is there any other questions that you have? Well, we were thinking about only doing a 90-day listing. Okay, I completely understand how you think that might, whatever, da da da. Great. I'll make sure that we cover that Thursday at 2. What other questions do you have? So now what you're doing is you're drawing out any objections that they might have before you even get to the home so that you already know how to answer them because you are preparing for that presentation. And when you get to the home, don't worry. Do not think that you need to just go right into the objections. You're going to do your whole listing presentation. And then at the end, they might not even have those same objections anymore, right? So you don't have to say, I know commission was, a concern or the 90-day listing. You can say after you do your presentation, what other questions can can I answer for you? Because the objections that they had on the call might not be an objection anymore. Okay. So in this market, you have to be a polished sales professional. So what does that mean? And yesterday I was at the Aspire conference and I just want to kind of like bring this up real quick because it was really interesting. So Jordan Belfort was a speaker, which I love him. I've read his book. If you don't know who he is the Wolf of Wall Street. If you've ever seen that movie, he is legit like the Wolf of Wall Street. That was based on a true story. And he talked about sales. And he has this straight line sales equation thing that he does. And one of the things that he talked about is basically if you have a scale from 1 to 10, right? 1 being somebody absolutely has zero interest in selling or, zero interest in what you're trying to offer, and 10 being like, this is the highest, like they definitely want to sell. They're ready. They've been expired on the market 3 different times with 3 different realtors, da 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 da. Those are the prime meat that you want to go after. Okay. But anyways, so he talked about the fact that what some salespeople do is they will try to take a hard no or a 1 and turn it into a yes, right? And you can't do that. And that's what's going to really like make your confidence go down, make you think you're not a good salesperson. So if you're trying to take a 1 and turn it into a 10, that is not going to happen. And so the only way you can figure out where your person, where your sellers fit with on this like 1 to 10 ratio is by asking them questions and digging deep, right? And so you also need to make sure that you are getting around the reflex no. And so I'm going to give you an example of the reflex no. When your prospecting expires, okay, almost always the very first, you're never going to have, maybe once in a blue moon, will you have somebody say, oh my gosh, I'm so happy you called. Please come over right now and list my house. Like that's literally not going to happen, right? Almost every time they're going to say, I'm not interested. I'm not selling. I took it off the market. I'm listing with the same agent that I listed with before. My mom is my agent, da da da, right? We've heard it all. Okay. But you cannot let that stop you. You have to get through that by asking questions. And that's a whole different class. That's a prospecting class that I have. But I just want to make sure that you're understanding that you have to make sure that you're asking the questions, that you're pre-qualifying your seller every time, and you're really understanding what their motivation is to sell. Why do they want to sell? I had an expired one time who was telling me he did not want to sell, but he lived in a 2-story home. His bedroom was upstairs. He could no longer make it up the stairs, and he was staying in a hospital bed in his downstairs living room because he no longer could go upstairs, right? He's telling me he doesn't want to sell. But I'm hearing otherwise, right? I'm hearing that there is going to be a situation where he unfortunately is going to have to sell, right, at some point in the future. So You really want to make sure that you're digging deep for those questions to determine their motivation. The next thing that you need to do is understand your market stats. You need to know what your market stats are, not just for this particular property, but for the area in general. So, for example, if I'm talking about Southwest Florida, right? And we have communities, and I'll just use my community for example, Bel Lago, right? I need to know what is going on in the Estero market, and then I need to know what's going on in Bel Lago. So when I sold real estate, what I had is every single month at the beginning of the month, I would pull out my market stats list. And I was a phone prospector, so I had them right there in front of me so I could see based on the areas. Coconut Grove was this, Coral Gables was this, Brickell was this, downtown Miami was this. Active, pending, days on market, months of inventory, everything was on this sheet. So I knew. And that is knowing your market stats and looking at them every single month is going to give you the confidence also to be able to go out and talk to other people about what's going on in the market. So you need to know the area, but then you also need to know that specific community or right around where the house is. You also have to realize and relay to your sellers that you do not set the price of the home, right? The market determines the price. And so a lot of times, and we'll go back to that, client the realtor was talking about today, the guy wants 1.6. It's really going to come in at like, let's just say 1.2, right? That's not your fault that the market is showing 1.2. A lot of times, and I remember I would feel bad, right? The seller wants one thing, but the price is somewhere else. And they might even say to you, well, the other agent that came over told me that they could get 1.6. Well, here's the thing. The other agent, obviously, let's just say, does not know pricing, and you don't want to say it like that to the seller, but there are ways with prospect or with scripting to get around that. But you really need to relay that the market does not determine the price. And that's where you sit down and you go over what the market stats are, okay? Because facts are facts. It's in black and white. You can see what things are selling for, price per square foot, all of that, okay? The next thing you need to do is be a strong communicator and make sure when I say strong communicator, I mean ask questions. People, have you ever been to a networking event and you go there and people come up to you and they go blah, 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 all about themselves. And you're just thinking to myself, oh my God, get me out of here. Like, I don't really, if let's just say same environment networking event and someone comes up to you and starts asking you, what do you do? Oh, whatever, questions about you. You like that person. You feel like trust with that person. So being a strong communicator means asking questions, not telling them all about you. Your listing presentation should not be about you. It should be about them, right? So asking questions about them and having a system to follow up with them once you have the listing every single week. And I'm going to show you what I used to do. You do not want to overprice the listing, especially in this market, and go back. And you also want to go back quick for price reductions. So you need to set the seller up ahead of time when you're having that price conversation and they say, well, we want to list it at 1.6, for example, and it's at 1.2. That's a big difference. So let's just say 1.2 and 1.25. Okay, so they want to list it at 1.25 and it's 1.2. So that is a conversation that you need to have because here's the thing in this market. In an appreciating market, you can say to the seller, okay, we'll go ahead and list it at 1.25 because the market's going to eventually catch up. In a depreciating market, which is where most markets are right now, if you price it at 1.25 and right now today it's at 1.2, well, guess what? 4 weeks from now or 3 weeks from now, if it doesn't sell, right, and it was at 1.2, it might be at 1.15, right? So now you're chasing the market down. So you do not want to do that. You need to make sure that you're setting the seller up ahead of time for those price reduction conversations that you're going to have. So knowing your market stats, you need to make sure that you know your days on market, as I mentioned, general area and then specific to the community. You want to make sure that you know your months of supply, because here's where months of supply is so important. Let's just say that we are 7 months of supply. Okay. So what that means is that if no other home on the market, no other home comes on the market right now, it is going to take us 7 months to get through all of the inventory that we currently have. So you need to make sure that you're letting the sellers know if the average days on market for a property is, let's just say, I don't know, 100 days, okay? And they don't want to price it under where the market is, then you need to let them know currently we have a 7 month supply of inventory. And the average days on market for a home just like yours is 100 days. So what that means is when we put your home on the market, okay, it's going to take on average about 100 days to sell and then another 30 to 60 days or 30 days to get the property sold, right? Once it goes under contract. So if you do not want, if we're going to price the home within the market, you want to make sure that they're understanding about how long it's going to take to get that property sold, unless they price it under the market, even if it's a little bit, but under the market, so that way they can have a faster sale. And that's going to be, determined when you determine their motivation, how quickly they need to sell, how quickly they need to move. And I want you to understand that you can have the best marketing plan in the world. It can be showcased in every single country there is. But if your property is not priced right, especially in this market, it is not going to sell. Okay, so do not take a listing that you cannot sell, because it's going to ruin your reputation. It's going to ruin your stats. And also, you can let them know, you know what? And I have many listings that I did not take, right? So I would just let them know, unfortunately, let's just use the 1.6 to 1.2 listing. I would let them know, unfortunately, I cannot do it to you to take the listing at 1.6 because I know that it's not going to sell at that. And the last thing I would want to do is put your home on the market and have you go through all of, the showings and stuff like that and know that we're not going to get that price. So as a duty to you, I just cannot take that listing, right? So you do not want to take an overpriced listing, and you do not want to take a listing that is less than 6 months minimum. Because if somebody wants to give you a 90-day listing, it's not worth it. It's not worth it. Okay. And I have, so those are all like objections that you guys need to work on. This is an example of market stats that you can pull up. I'm sure every single board has market stats that you can get from your MLS that you can put and go over in your listing presentations, but this is just an example, okay? Pricing property, we talked about that, not overpricing the property, or in this market especially, you're just going to be chasing the market down, and you do not want to chase the market down. So you're going to review your local market stats, bring the market stats with you. Now, I want to also kind of bring this up, and this is in another class that I do. I have a whole class on listing presentations. But you need to determine who you are working with on the phone. And if you are working with an analytical, you want to bring a lot of market stats. If you are working with a driver, or you are working with like an expressive personality, right? You do not want to bore them with all of your market stats, because if someone brought me 1,000,000 market stats, I would be like, okay, this is like, no, I would get very bored. So you want to make sure that you realize also who you're dealing with. You want to base your price on sold properties. So do not worry about what's active. What's active is your competition. That's not the comp. The active properties is not a comp. Your sold properties are comps, because when an appraiser goes to the property, they're only going to be looking to see what has sold. Okay, so your active is your competition. Your sold properties are your comparable sales, for giving you an idea as to where the market's at and where the property should be priced. You need to get to their motivation to determine the price. You want to explain days on market and how that works. And I explained to you guys, based on where you want to go, it's taking on average 100 days to get the property sold, and then another 30 to 45 to get it closed. And that days on market and motivation can help you determine the price. Okay. Show them their competition, right? And then show them how many days their competition has been on the market. And you can also show them the expired listings and say, look at these properties are just like yours. They were on the market for 185 days and didn't sell. They are now an expired listing. You don't want to be an expired listing. You do want to move to Boston by June, correct? Okay, excellent. So that is why I feel that we should price the property at this. Explain to them why they don't want to price high and come down later. And then a new listing at the right price with the right marketing will sell. And that is true. So reverse prospecting, I use this a lot. So if I have a property that's sitting, okay, and this is something that you're going to let your sellers know, it's part of your listing presentation, it's part of your marketing plan, it's what you do for your sellers, is that when the property, let's just say, is sitting, or you have a price reduction, or there's like some sort of new loan program, or now you're offering, I don't know, $5,000 seller concessions to the client, you want to go into MLS and do reverse prospecting. So there is a tab called reverse prospecting. You go into your listing and you can pull all of the people, all of the agents that have a client that is a match with your home. So if the client entered the buyer into MLS and put what they were looking for, their criteria, and your listing matched with that client, well, they are in your reverse prospecting. So what I would do is I actually had my virtual assistant do it. I personally didn't do it, but I would reach out to that agent and just say, hey, I just wanted to let you know we just reduced the price on 123 Main Street from $350 down to, I don't know, $335. The seller is definitely interested in getting the property sold. You have a client, I'm doing some reverse prospecting, and you have a client that might be interested in this property. I just wanted to let you know in case you could reach out to them and see if they're interested, or let them know about the price reduction or whatever. So that is how you can use reverse prospecting, and this becomes part of your marketing plan. And this is one of the things that separates you from every other agent out there. And I can tell you that if you are strong on price, you know your numbers, you communicate, you show up polished, you pre-qualify your clients before you get to the home, you're great with your objection handlers, you go for the close, right? You're going to get listings and you're going to get them sold. So your listing plan of action, this was a big thing because, as I mentioned, I worked a lot with expired listings, and their number one complaint was communication. So I had a couple of things. Number one, I had a communication guarantee in my listing presentation because I knew I was going to communicate with them weekly. So in my listing presentation, if I did not communicate with them every single week, they had the opportunity to fire me and cancel the contract. Okay. So that was one of the objections that I got a lot. How do I know you're going to list the property and I'm never going to hear from you again? Well, Mr. and Mrs. Seller, I have a communication guarantee. And what that means is that you will hear from me every single Friday via email with everything that's going on with your property. And if you don't, you can fire me, right? So I made sure that that email went out every single Friday. What the emails on Friday did was a couple of things. I had their weekly update on everything that was going on with the listing, including any current market stats, if there was any new active, pending, or sold homes that came on the market. The second thing was I reviewed the pricing or recommended a new pricing strategy if it was needed, okay? The third thing that I did was I reviewed all of the showing comments. So I know that a lot of people will have their sellers get all of the comments immediately from the showings. I did not do that because there's a lot of agents out there that don't know the market, right? And if I have a seller that is priced at $500,000, but I know that it has to be at $450,000, and I have an agent that comments great price or it's priced right or whatever, but we all know it's not, then that is going to go up against me trying to get a price reduction. So I didn't want them seeing all of the comments. I emailed them on Fridays what all of the responses were from the showings. Two things about this. Number one, they knew they were getting an email from me on Friday with all of the responses from the showings. So they're not calling me after every single showing, wondering what happened with the showing because they know not to. They know it's going to be on Friday. That is one of the things that you want to make sure that you're doing is that you're telling them when you are going to communicate. Because if you have 30 listings and you have showings every day on these and you have sellers calling you all the time, like that is a full-time job in itself. So you want to make sure that your communication, your weekly communication is told to them at the listing presentation so they know what to expect. And almost always they're good with that, right? And then any update on next steps for marketing or plans. So maybe I had my virtual assistant or my assistant calling the neighborhood to let everybody know about the new price, or maybe it was an open house or whatever. So I have my update on the next steps for the plan of our marketing plan. Okay. I am going to put this, I did not put this in the chat. I will at the end, courses.donebyone.ai. I have a prospecting course. It's an hour and 45 minutes. And you have a giant script book that has all of the scripting, all of the objection handlers. I go through how to effectively say all of these different scripts, all of the objections. So I will put that in the chat afterwards if anybody is interested in that. And sales is really nothing more than effective communication to get the person to make a decision. A lot of times we say, oh, we don't want to sound salesy, right? But every single profession, loan officer, mortgage, title, travel agent, every profession, we are in sales. So we need to make sure that we are communicating effectively. And that's all it is. It's communicating effectively to get someone to make a decision. It's not trying to sell something on, sell somebody on something, right? So you want to make sure at this stage of the game that you are so good at your sales listing presentations, your price rejection, your objection handlers, your price reductions, your buyer presentations. Everything has to be scripted and you need to be working on that. And that is what separates the good agents from the great agents. And that is how you get more deals. So now we are going to jump into the loan programs. Does anybody have any questions before I hop into the loan programs? Let me see here. No? Okay. So we are going to talk about the 2-1 buy down. I'm going to explain how that works. We're going to talk about a move up down scenario. Okay. Buy before you sell, assumable mortgages, fix and flip, DSCR, and also home equity lines of credit. These are so important for you guys to know because this is going to give you an edge. If you do not know about specific loan programs or how they work, right, then you cannot offer them to your sellers. This is one way that you're going to be able to get your listing sold is by giving your seller options and knowing what the different options are. So we're going to talk about a temporary buy down first. And I really want to explain how this is because I get calls a lot where they'll say, well, can't my buyer just buy down, do a temporary buy down? Well, it doesn't make sense for a buyer to do a temporary buy down. It would make sense for the buyer to just buy down their interest rate, which they can do that paying points, but that doesn't have anything to do with a temporary buy down. And I'm going to show you why it wouldn't make sense in a second. So a buy down is a seller concession. Just like the seller would give money towards closing costs, the seller can give money towards a concession to reduce the buyer's interest rate for a certain period of time. So in a lot of times, it's going to be more beneficial for you, for the home seller, and for the buyer to offer a buy down as opposed to just dropping the price on the home. And I'm going to show you how it works. So there's 3-2-1 buy downs, 2-1 buy downs, or 1-1 buy downs. And the 3-2-1, 2-1, and 1-1, those are years. So what that means on, let's just say a 2-1 buy down is that their interest rate for the first 2 years is lower. And then after those 2 years, it's going to go up to the normal rate of whatever it was. So this is an example of how that works. And I'm going to show you why in this example, it would be more beneficial to offer a buy down than it would be to reduce the price $20,000. So if we take a purchase price of $500,000, okay, down payment of 5%, the loan amount of 475, 6.125% interest rate, which I've done this presentation a year ago, and 6.125 interest was not an option. It is an option today. So that is a good thing. We're moving in the right direction here. That would make their total payment 2886. Okay. Let's say the seller or you are like, you know what? We need to drop the price. Let's drop it down to 480. Okay. Let's see what this does for the buyer and for the seller and for you. So if they drop it 20,000, right? The new loan amount is 456, same interest rate, 6.125. 2770 is their new monthly payment. They're saving about $115 a month by that $20,000 price reduction. Okay. So that $20,000 price reduction is costing the seller $20,000. They're netting $20,000 less. The buyer is saving $115 a month, and your commission is now based off of 480. It's not based off of the 500,000. If they were to offer a buy down, okay, the purchase price stays at 500, the loan amount stays at 475, but that 6.125 interest rate, we're doing a 2-1 buy down. So the first year, the rate is only 4.125. The second year, the rate is 5.125. And then the remainder of the loan, 6.125, is what the remainder of the rate will be. Now, the whole premise in this is hopefully within 3 years, that interest rate of 6.125 is going to be at some point in the fives, right? Lower. So then they could just do a refinance. So if they were to do the buy down, their total monthly payment in year one is $2302. That is saving them $584 a month. Their total payment, principal and interest, in year two is $2586. That is saving them $299 a month. Okay. So the cost to the seller is $10,606, but they're making $489, right? As opposed to the 480. So they're actually netting a lot more by offering this buy down, and the buyer is saving more. So the reason why I want to show you guys how it kind of works, the reason why it doesn't make sense for a buyer to pay the $10,000, right? Unless they were just buying down the interest rate, then that would be permanent, is because what the seller is doing is they're paying that $5 upfront, that 584 times 12 plus 299 times 12. Those two together is costing the seller, let's say the $10,606. That is what they're paying. They're paying the difference in the interest, the difference in the payment from what it would be at 6.125 to what they're actually paying at the 4.125. So that is why it's better for a seller to pay, because if the buyer actually had that money, they would just buy down their interest rate. But if they don't have that money, then the seller is doing this for them, and the seller is actually going to net more in the end. Okay. There is a temporary buy down calculator at mortgageprofessor.com. I tried to look it up today before I did this presentation, and it wasn't pulling up, but it was before. So check out Mortgage Professor, and you guys can do your temporary buy down calculators there. So that way, if you want to see, does it make sense to lower the price, or do we want to try a different option and offer a buy down and now advertise an estimated interest rate, right? Because the buyer has to qualify, but an estimated interest rate of a certain percentage. The next thing that we're going to talk about is a move up or down buying hack. So this is when you hear the people that want to buy a new home, they have a 3.5% interest rate on their current home, and they don't want to move, but their family is growing. They need a bigger space. They just don't know what to do. Okay. So this is where strategy comes in, and this is where a good loan officer will help you and work with you in figuring this out. So if you do not have a good loan officer, okay, I am here. Or if you do have a good loan officer and you're working with that loan officer, you want to make sure that you are getting this type of stuff from them, right? So that they can help you strategize. So let's just say that the client owes $300,000 on their current home and the value is around 5. So they're going to get about $200,000 in equity when they sell. They need a larger home. Their family's growing. They don't want to lose that interest rate. But over the course of the years, right, they now have racked up $60,000 in credit card debt. at an average rate of 24%. And they also have a $40,000 car loan with an interest rate of 8%. So they got their $300,000 mortgage at 3.5%, but they have the $60,000 credit card debt and the $40,000 car loan. Okay, so that's about $100,000 that they have in debt. This is what they can do to keep their monthly payments almost the same. So they want to buy that $700,000 home. If we look right now and just look at their mortgage payment, it would be about $1,347. Their credit card bills would cost them about $1,726, and their car loan would be about $791 a month. That makes their total monthly payment $3,864. And if you're not into math, don't worry about it. Like, just understand the concept of what we're going to be doing here. So the client can now buy a new home, and actually in this market, it would be even better because if their credit's good, we're in the sixes for the rates. So this example is at 7, but it's actually going to be lower. So let's just say they get a $700,000 home, they sell their home, they made $200,000 in equity. What they're going to do is put $100,000 on their new home, and then they're going to take that other $100,000 and they're going to pay off all of their credit card debt and their car. So now they have no other monthly payments. The only thing that they're left with is their mortgage. And their mortgage on this new $700,000 property at 7%, which will be lower now, is almost the same as what it was on their lower property on the $300,000 at 3.5%. We can see here with all of the credit card debt in their car, they were at $3,864. With this new loan and no debt, they're at $3,992, which actually will be less than that at this point. Okay. So this is a move up, move down, buy or hack example when somebody wants to get a new home. And remember, we're going back to the motivation, right? So we need to show them how they can actually get into, because a lot of times they get fixated on that low rate and they can't get that out of their head. But they have all this other debt. So they're not realizing that, yeah, you have a low rate on your mortgage, but high rate on your credit card and your car. So let's just wipe all of that out, get you into your new home. Yes, the rate might be a little bit higher, but you're still paying about the same amount each month. Does that make sense? Hopefully. I know it was a lot of math, but I think you guys all got the concept there. So drcalculator.com, you can do a blended rate calculator where you can plug in what the credit cards are, what the interest rates are, and help them really understand the bigger picture, or just refer them to a loan officer like myself that can help them figure out what the best strategy is going to be for them moving forward. Buy before you sell. Okay, this is another loan program, which is awesome. I have done it. Now, some of if you're in Southwest Florida, I hate to break it to you. And if Susan Heller is on this list, on this presentation, she knows that there are some areas where we are in a declining market. Okay, which means that if the appraiser puts declining market on the appraisal, that loan to value is going to go down. So I believe it's 5%, right? So if the appraisal says declining market by the appraiser, their loan to value is going to have to go down. So buy before you sell, this is why I'm bringing this up. Buy before you sell, they have pulled out of certain areas. Now we do have other lenders that will do it. The one that I'm referring to here in this scenario is HomeLine, and I've used them before on this program. So basically what it is like a 0% interest bridge loan, kind of 0%. So this is for somebody that wants to buy a new home. Their home is on the market, or maybe it's not even on the market yet, but they need the equity from their home to be able to buy their next home. So what happens is that this company will come in. They're going to make a cash offer on the property so that they're able to qualify for a mortgage and exclude their current mortgage payment out of their debt to income ratio. After they close on the new property, they have 21 days to list their property for sale with any agent. So if you have a listing right now and you know somebody needs this, maybe they're buying new construction and they don't want to lose their escrow deposit on that new construction, but their home hasn't sold yet. This is a perfect example of what we can do for them and how we can get them the funds. It only works if their new loan is going to be conventional. So it will not work on an FHA or VA loan, only if the new loan is conventional. So they have 21 days if it's not listed yet to put it on the market, and then they have 90 days to get it under contract. Sometimes they'll go past the 90 days, okay? But 90 days to get it under contract. If it is not sold within the 90 days, or in this instance, probably like let's just say 110 days or whatever, the lender or this buy before you sell program is actually going to buy the property. Okay. But they're going to allow the real estate agent to continue to market the property and, continue to sell the property. They're not using a different agent. They're going to use the same exact agent. Once the home sells, if that home sells for more, so let's just say the company bought the property for 300,000, it actually sells for 350. The difference between the 300 and the 350, the $50,000 is going to go to the actual seller. So they will, even if they get this company's buying it for low, so whatever they do sell it for, the difference will go to the seller. So you're probably wondering, well, what is the fee on this? Number one, as I mentioned, you have to get a conventional loan. The fee is 2.4% of the purchase price. Okay. So let's just say the total commission is 6%. The real estate agent is getting 3, buying agent 3, selling agent 3. The program fee is 2.4. So you got to think about it that it's basically 8.4%, right? So that 2.4% is only when it sells. But like I said, that client, if it sells for more, is going to be getting the difference. They're also getting the equity to buy their next home. And then they have the cash offer on their property so that they are not including their current property in their debt to income ratio, which allows them to qualify. So they're essentially getting a 0% interest bridge loan. I know it's a lot. Just think if somebody needs to buy another property and they need the equity from their current home, they have 2 options. They have 1, take out a HELOC. 2, go with the buy before you sell. Because I do not know of any good bridge loan programs. I know that there are some out there, but I do not know of any really good bridge loan programs. So this is a perfect program for people in that situation. So how does it work? We have to get the client's property approved, number one. Number 2, and they do send somebody out to inspect the property. Number 2, we have to get them approved for financing on their next home. They can now go make a strong offer on another property because their home is basically pending. They can move in and close on the new home. And then it allows you guys to maximize the home sales price because now you can go into this vacant home. If it needs to be staged or whatever, they have now moved out. So you can fix up that home to sell for maximum price. The next is assumable mortgage. I'm not going to go too much into this. I just want to explain how this works because I do have agents call me and they'll say, my client has a VA loan. It's only at 2.5%. And we're thinking about offering an assumable mortgage and letting all of the buyers know. Here's the thing about assumable mortgages. They can be awesome, right? But if the property is selling, and I'm going to go on to the next page here, an assumable mortgage allows the buyer to purchase a home by taking over the seller's mortgage. So they're assuming the current mortgage. And one reason buyers decide to buy a home with an assumable mortgage is basically to take advantage of that lower interest rate. So if rates have risen and somebody has a 2.25%, 2.5%, 3.5% interest rate, even 4%, right? It might make sense for that mortgage to be assumable. But here's where it gets tricky, okay? If the property is selling for $500,000 and the assumable mortgage is $300,000, well, that buyer has to come up with the gap, right? The 200,000. They can assume that $300,000 mortgage, but the property is selling for 5. So how are they going to get the $200,000 additional to be able to buy a $500,000 home? That is where it gets a little tricky. So an assumable mortgage might be great if they have an additional $200,000 to put down. Or what the buyer can do is they can always get a second mortgage. But if that second mortgage has a high interest rate on the $200,000, then in my opinion, we need to look at what that blended rate is. Let's just say the second mortgage is at 8% and the first is at 2.75. We got to add them together, right? And see what that blended rate is because they're no longer just paying 2.75. So it might sound awesome. It could be a great strategy for you if you do have a VA or an FHA current loan on the property with a very low interest rate. But that buyer, if you're selling it for a lot more than what the loan balance is, has to come up with the difference. So you need to figure out what that blended rate is. Okay. This is one of the things that I absolutely love that I wanted to show you guys. And I see this all the time. So I went on MLS and there are 30, there's actually more, but what I put was cash only and known damage. So I was looking for, and I'm trying to hurry up because I have a meeting right at 12. I was looking for properties that have cash only and known damage, meaning there's issues with the property. Okay. If you see one of these properties expire, you need to be the very first agent over there to that property because these agents that are listing the properties that cash only do not realize the loan program that I'm about to show you, right? Because if they did, they would have this loan program in the confidential comments and they wouldn't be listing this property as cash only. Think about it. Look at these prices. Who has $965,000 cash to drop on a home because, maybe there was some damage to the property, right? Plus you got to fix it up. Not a lot of people. So what you're doing is you're limiting your buyer pool when you're listing this as cash only. So we have a fix and flip product. If you guys see any homes on the MLS that looks like this, know that we can finance it. And the best part about it, and I'm going to get to it in a second, is that 100% of the renovation costs are financed for your clients. So if you see a home like this expire, you need to be all over that because then you're bringing in that listing to the expired listing and saying, I noticed that your last agent listed this property as cash only. And I wanted to let you know that we have a loan product that will finance this home. And it's basically the same as cash, right? So now you guys are going in with this new product that you're learning about that is going to be able to help get this property sold because now you're opening up your buyer pool. So if it's an experienced investor, somebody that's done a couple flips or rental properties in the past 2 years, we can go 90% loan to cost. Loan to cost means if they're asking $400,000, that's the cost, right? We can finance 100% of the rehab. So if they need $100,000 to fix this home up, it's financed. And then the after repair value, I'm going to show you how this works in a minute, is 75%. If they are an inexperienced investor, they haven't done any flips and stuff like that, we're 85% loan to cost. Guys, no income check. I'm putting they must close in an LLC. Oh no, this program, yes, they have to close it in an LLC. If they don't have an LLC, no worries. I can tell them how to do it. It's super simple. In a lot of cases, we don't even look at their assets and they need a 660 minimum credit score. So let's take a look at this example. The client is selling a home for $200,000. They need $100,000 in repairs. After repair, it's going to be $500,000, right? So the purchase price is $200,000. That means they're putting $20,000 down at closing. They're getting a loan amount of $180,000. They're going to finance $100,000. The financing gets paid out in draws. So they have to do some work, submit the work, and then they get their money back. And then they do some more work, they submit the work, and then they get their money back. It works like that. So now we have a total loan amount of $280,000. Let's just say once the home is complete, it's going to be worth $500,000, right? So the minimum ARV, that means it's a 56% after repair value. So if you take 500,000 times 75%, because that's the after repair value percentage, that means that the minimum this property can be valued at after closing is $375, right? So this is all you need to know is that if you see a home like this, we have the program for you. If you're working with investors, awesome. If you have sellers that have a property like this, We have fix and flip loans and they're awesome. I love them. I do them a lot. Last two loans left. Our DSCR loans, our rates are insane. I just closed one at 6.5. Somebody from Massachusetts was buying a property in the Cape. It did have a 3-year prepayment penalty on it, but the rate was 6.5%. It was a 50% loan to value. We do not check any income. The only thing we look at is rental income. The way the rental income works is based on ratio. So a 1-to-1 ratio means that if the total monthly mortgage payment, including principal, interest, taxes, insurance, and association dues, is $3,500, then the rent has to equal $3,500. That is what a 1-to-1 ratio is. If the total monthly payment is $3,500, but it's only going to rent for $300, that is under a 1-to-1 ratio. If it's going to rent for $4,000, that's over a 1-to-1 ratio, right? We have loan programs for any ratio, but the reason why I'm bringing this up is because the best pricing and the best options are going to be for a 1-to-1 ratio. That is where we are going to get prime pricing. If it's under the interest rate, we can still do it, but the interest rate is going to be higher. Typically, they're putting down 20%. We are not looking at their income. They can close it in LLC if they want to. We can do these loans nationwide, and we can do them for a purchase, a cash out refinance, or a home equity line of credit or second loan. So we do have DSCR loans if you have investors right now that need to take money out because they have, good equity. We can do those loans on the second loans also. And last but not least, we have the home equity line of credit. Our home equity line of credit is amazing. They apply online. They close with an online mobile notary. They can get their money in as little as 5 days. No prepayment penalty, no appraisal needed up to $400,000, and they can use the funds for anything. So if they want to remodel their home, put a down payment on a new home, put in a pool, education, retirement. I have investors right now that are using the home equity lines of credit, taking cash out of their home to be able to go and buy an investment property. Okay. So this is a perfect loan for anybody that is looking to, pull money out and maybe buy another property. Right. So this is ways that you guys can help them figure out how they can we're seeing a lot of, like I said, we're seeing a lot of REO. We're seeing a lot of short sales. Now, with rates where they are, properties are cash flowing. This is a perfect time for investors. So we have every loan program that there is. Bank statements if they're self-employed. We have the ground up construction if they're investors. No ratio, super jumbo. And I'm doing a loan right now for somebody who has an Airbnb property. It's in a self-directed IRA. The thing about the loans that are in self-directed IRAs is that not typically, you cannot get a loan where you are the personal guarantee. So if you're the personal guarantee on a loan, with a self-directed IRA on a property, if someone did like a 1031 exchange or whatever, or they're holding a property in a self-directed IRA, they need a non-recourse loan. What that means is that they cannot personally guarantee the loan. So I have those products for people that are in self-directed IRAs to be able to pull the money out of the property and then use those funds to go ahead and invest it in other properties. So if you guys have anybody in that situation, let me know. We are going to be holding a 4-week Back to Basics challenge. It starts next week. This is the QR code. I don't know if the QR code is working. I am going to send you guys an email after this, so that way let me check and see. Yeah, I don't think it's working. So I'm going to send you guys an email after this that has all of the information that I just talked about, the handouts, information on this Back to Basics challenge. If you want to hop in on it, it is going to be for the next 4 weeks where we are going back to basics. You will be held accountable, but this will really propel your growth into Q2, and really it's going to help you get more business. So I will send you all of the information on that as well as the handouts. Does anybody have any questions? Because I do have another meeting after this. I just want to see if there's any questions that you guys have. And I don't think so. Let's see. You're welcome. Thank you for coming. And I will send everybody, like I said, I'll send you guys all an email and you'll have all of the information on the back. You're welcome, Shaden. Thank you for coming. You'll have all the information on the Back to Basics Challenge if you guys want to do that. Once again, it starts next week. And check your email, check spam. It's coming from info@donebyone.ai. So if you do not see it, please check your spam. Okay? Have a great day, everybody. Bye.